Eric Osterhaus joins us now, Paragon Ag Advisors in Silver Lake, Kansas, to review the markets. Hello, Eric. How are you doing?
Doing really good. Thank you for asking, John.
Good deal. All right. Had quite a bit of information this week. The Wheat Quality Council's wheat tour wrapped up on Thursday. The number came in at 47.2 bushels per acre on the average across all 3 days across the entire state. A little over 300,000 bushels total production is what is estimated on the acres that were talked about to begin with. Now, I want to say a couple of different things. Number one, that's 10.2 bushels per acre higher than last year. That really didn't come as a shock to me because of all of the moisture that we've had. And my travels around, I've seen some pretty good wheat. What I think may end up different is the total bushels on harvested acres. And the reason I say that is because there are some wheat fields that are still underwater, and there are some wheat fields that didn't get drilled, or the wheat tour did point out that some of those acres got drilled late enough the wheat didn't look quite so good.
Yeah, there's still a story there with the wheat, and I think it was kind of interesting to see the day that a lot of those numbers came out. We actually saw wheat trading higher. So you get bearish news, and lo and behold, the most beat down market actually turns around and goes higher for a little bit. I think the key question is going to be, of course, it's a yield, but on what acres? And I know that's what you're bringing up too. And the other thing I took from the wheat tour is the fact that they did mention several times that the wheat is also a little bit behind. Now it may catch up here, but again, a little bit with the wet and the cool weather. The other thing you have to start talking about is maybe disease starting to show up as well. And so again, there's still a play there. And as we all well know, the wheat has been beat down pretty hard here in the last several months in a row. And so a lot of that I think can be attributed to fund selling. And so the closer that we get to harvest, maybe we'll start to see a little bit of those funds coming out of those short positions. Maybe we'll get some more news on those acres, and at least a little bit more risk premium added in here before harvest really ramps up and goes.
Okay, so we saw a little bit of gain on Wednesday and Thursday in the corn market. Technically, do you think that maybe we've curved here at the bottom for both the wheat and the corn market? Because there's times that these markets walk in tandem with each other.
Yeah, I think you're seeing some of that. And corn is again looking there. I don't want to say the table is set for a rally necessarily, but it certainly looks a little better than a few weeks ago. Again, with the weather outlook that we have over the next 7 to 10 days, if it continues to stay cold and wet and rain's actually hitting a lot of those areas, especially in those important I states, we'll have to see if the forecasters are right. But I think that is starting to breed a little concern out there in the corn market, and that's maybe why we're starting to see a little more action to the upside, or at least stalling out here. And actually having wheat move higher too, I think helps as well. In the background in the story, I think also a little bit of that trade talk here in a couple weeks. I'm just saying, you start to paint a scenario where it does stay wet. You do see some sort of movement perhaps on that trade deal here in 2 weeks. You start getting some concern regarding prevent plants and seeing some acres leaving corn. It always takes more than one headline to get a market to change direction, and we at least have the potential for 2 or 3 headlines.
Yep, good point. I've got less than 60 seconds here. Your thoughts on the weaker cattle market this week?
Boy, it sure just, we have a few things going on that we didn't want to see. Box beef, we saw that trading lower here over several days. We saw the cash markets also following the futures down. You're starting to see some of those long funds decide to go to the sideline. And we're kind of seeing some of that happening at what we would traditionally call a time, the grilling season, where you think you would see some support. I do think a lot of it is money flow. I think we just have to get through the next couple weeks, and I'm hoping that we're starting to feel around for a bottom here and actually see that trade start to recover just a little bit.
Yeah, well, you make a good point. A lot of it still depends on trade. That could happen maybe next weekend. We'll have to wait and see. But yet, $4 to $5 lower. And what's also alarming is we're still trading at a premium above the live cattle market on that front month of June. What's the website?
www.myagadvisor.com.
All right, Eric, always good to visit with you. Eric Osterhaus with Paragon Ag Advisors here, and stay right there because we'll be back with more in just a moment.